Starbucks CEO, I'm concerned about dairy. This was an article on the Business Insider, or which was posted on the Business Insider, originally posted on Reuters. Let's go through it. Starbucks Corp is wrestling with higher costs for milk and coffee, the two ingredients in its popular lattes, but that does not mean its customers are going to pay more. I want to resist raising prices in this environment, Howard Schultz, Starbucks chairman CEO, said, referring to still cautious spending by many consumers. I am concerned about dairy both domestically and around the world, and we are working feverishly with our suppliers to identify new suppliers, Schultz told reporters after the company's annual meeting in Seattle on Wednesday. U.S. dairy prices are at record highs and could move up a bit more in March before easing as a result of increased production, said Jerry Dyer, editor of the Dairy and Food Market Analyst. Others experts say the price is primarily due to increased demand from Asia and other markets. And it goes on saying that General Mills stated an 11% decline in U.S. retail segment operating profit in the last quarter. So we are starting to see some big name companies like Starbucks. In my opinion, they're going to have some problems with their margins, especially with a stock that has a PE of close to 600, 700-ish. I don't know where it was or where it is right now. I was shorting it last week. I may get back into a short if the stock goes up. But anyways, when you see these companies starting to see higher prices when it comes to milk, coffee, etc., that does raise an eye of concern for many investors, or for some investors who are looking at specifically retail-oriented stocks, or if you're looking at a company like General Mills and companies like that dealing in food industry. And now let's look at the year-to-date chart of some of these commodity prices. So last year, before I get into this, we saw stock market going significantly higher, and part of the reason, in my opinion, looking at this is that, hey, you had the yen carry trade, you had Abenomics, made the money go into the stock market here in the US, Japan, rest of the world. And secondly, what Wall Street saw, they saw some prices last year collapse or continue to decline. If you look at corn, coffee, and a few other prices, I remember orange juice prices went down. But this year, year-to-date relative performance. I mean, look at coffee. It's up over 60%. It's been declining ever since, I think, the past week or so. Lean hogs price increase, 47%. Corn, 19%. Wheat's up. Pork bellies, oats. Orange juice is up over 10%. Now, you have to look at this. How is this going to affect some of these companies, like a Starbucks or General Mills, for instance? And throw in many other companies like that sell to the retailer or sell to the common middle class. In my opinion, it's going to hurt their margins. If you look at the past few years, the government's saying it's 1 to 2% inflation. Once again, I don't trust government numbers, but this is what Wall Street looks at, okay? Doesn't matter what most of the people here think. It depends on what Wall Street thinks. Even though you may not agree with them, they're the ones with the money and the investment world. So they believe these BS numbers. So if you look at it, inflation, we had disinflation past few years, and now you're starting to see these commodity prices going up. So, in my opinion, what's going to end up happening is you may end up seeing money get out of these stocks that may have done well in the last year or so, and they may go into these dividend-paying stocks, these higher dividend-paying stocks. I mean, if you look at the Dow, the past few weeks, last week, this week, I remember seeing IBM up. So I think you may see a shift going into these high dividend-paying stocks, or these dividend-paying stocks. We shall see what's going to happen and whether or not these commodity prices will go up. I mean, gold prices have gone up, silver prices have gone up. In the interim for the next year, year and a half, I wouldn't be surprised if gold and silver go higher from these levels, but then I'm looking at a deflationary head fake. A lot of people are saying about a crack up boom. I don't see that yet. I do eventually see a crack up boom happening with nasty inflation, but that could be postponed to another day. And I could get into it in another video, but I have talked about this before. But currently, for the next year, I think this is what's going to affect some of the companies out there in the stock market. And some of these companies with over hundreds in PE ratios, I think those are companies that will get hammered and there's going to be some sort of rotation going on. What do you guys think? Leave your thoughts below. Talk to you later. Bye.